because supply demand was really simple. If there's order block, that's order block is tradable. Okay,
Yeah,
this order block
yeah.
is tradable, and that bearish order block is tradable. That's really simple. Okay, but there were no concept of liquidity. If you look at the liquidity, because liquidity is what's it's completely changed the game of trading right now.
All right. We're here with 6 times ICT. We've made a couple calls and we have been able to do the interview we've really been anticipating for. So 6 times ICT. What exactly is the idea behind your name?
Actually, when I started trading like 2 years ago, okay, so I was like using different concepts and all these things, but I was really it was really hard for me to find success behind like the moving averages and all those things. Then I came across ICT 2022 mentorship, and so like there was a YouTube conversation about there's a guy whose name is like Nick Trader. I think I was watching that guy at the time, and then he was in like sort of confrontation with ICT over some smart money topics, and then I just went to watch some ICT videos, and immediately I got the felt in those videos and all those concepts, and I just started like watching his videos, and I finished his videos in 1 month, like 2022 mentorship. Uh, like he was, posting videos daily at the time, and I was like watching that with the same speed. And when I was finished with 2022 mentorship, then I started to immediately like went to after his content, like previous content to 2016 mentorship, all those content, and I started watching those too. And then immediately I just made a page because I was a retail trader, and then I just came to these new concepts, and everything was like completely new for me. And I immediately realized that these were like problems in my trading, where I would like just immediately be kicked out of a position because I didn't know when to trade. I didn't know about the time, the kill zones, anything. So I came across this content, and then when I just started when I realized that okay, these were my main mistakes, and the time was my problem, and the liquidity was my problem, and all those concepts. Then I started, I made a page at the time, and also just named myself like 6 x just like before that this name was in my mind already, so I just changed it to ICT because I was a retail trader, and then I just add the ICT to it because then I started trading ICT concepts, so I just added the ICT to my 6 times. Before that I had different name, but the 6x was included because the 6 is kind of like the attention one, there's a number in it, and there's the X in it, so it's just the big name like 6 times, but I just put X in the place of time, so it's 6 times ICT. Yeah. So I just put like this more appealing, everybody has name like for example their own name or some kind of different name, so I wanted to make my name really branded, so it's more attractive to people, even though if you see I'm not posting a lot, but when I post I get more attention or more likes and comments on my post, even if I'm like not posting for a while, but when I post I will still get the same attention because people have this this is a kind of like psychological, there's a number in it, and that's completely different than other names.
Yeah.
So that's why it's more appealing to other people in the appealing name. Yeah.
So the next, I have the second question for you. So you made mention of you starting ICC and with 2022 mentorship, and I think that was last year when the whole 2022 mentorship actually came. So before 2022, are you saying that you had no idea about smart money concept before, or were you actually trading smart money concepts?
Yeah, I was actually aware of the supply demand, and I still have like the really best really concepts, and the drop based drop concept. I still look into those things, but really little. But right now I have added like all the ICT concepts into those concepts too. But before that, I did not know about the timing, that when to trade. Even though if I know that this is a demand zone, but this is most likely to hold or not. This was a really important thing for me, and I was like into this proton trading and all those different smart money trading. but they were not most, like they're not as accurate as ICT for me. That's why when before that, I was trading the supply demand as well as some retail concepts like this is support and this is resistance. But I didn't know about the fair value gaps even. That what was the fair value gap? Yeah, okay, I was aware of the imbalance, but was not actually aware of what is the most likely which fair value gap is going to hold, or what time price is going to come back to it. But right now, it's completely my trading is based on accumulation, manipulation, distribution on high time frame, on lower time frame, and like liquidity and these kind of things. So before that, I would be using supply demand, but I did not knew that, okay, this is the main order block or this is most likely going to hold. But right now I'm using liquidity. If there's liquidity, then the area is special for me. But before that, I did not look at the liquidity. Okay, you can just pick a low, but you don't know if this low is going to hold or this low is going to deliver. Because there will be order block always at the low. But will this low is going to hold or not? That's the most important thing, because I was not aware of the AMD, accumulation, manipulation, anything. Okay? So I would just trade the order blocks. Most likely it would get failed because you don't know which order block is going to hold.
Yeah, because of no understanding of institutional order flow, right? Yeah.
Yeah, that was the main problem. And the timing was really, really important because I didn't know about the kill zones. Okay, this is ICT kill zone, and this is most likely the liquidity. I don't know about the Asian kill zones, the London kill zone, nothing. But I was just aware of, okay, this is the supply and this is demand.
Yeah. So that leads me. Really hard. So that leads me to a very, very controversial question here. We have a lot of people out there that trade SMC, and we have a lot of people there that trade ICT too. And then we have this understanding between these two that ICT believe that an SMC trader is probably stealing ICT's concept, but SMC traders just believe that they've molded something for themselves out of ICT. So I want to ask you this question: do you feel that SMC and ICT are probably like, are they alike, or are they entirely different, or do you feel that SMC is like a simplification of ICT?
I think SMC is okay. There's supply demand like way before. Like supply demand is too old. But when it comes to smart money concepts, I think there's like ICT once said in an interview that he's like more than 80 his own inventions. Okay, in smart money concepts. So I think that today the SMC which we have, which is smart money concept, like liquidity. Because supply demand was really simple. If there's order block, that's order block to tradable. Okay, this order block is tradable, and that bearish order block is tradable. That's really simple. Okay, but there were no concept of liquidity. If you look at the liquidity, because liquidity is what it's completely changed the game of trading right now. Because people was unaware of liquidity, but they were aware of this is the order block and this is the bearish order block, and the supply demand is simple. But actually, the SMC, the people right now they're trading. I believe that they are actually the, for example, change version of ICT, because ICT say that before, like I think he mentioned the air, which was like 1998 or something like that. He said that if you find any of liquidity or these concepts before I mentioned them, then you can sue me. Simple. So it means that the liquidity concept is overall, I would say it's internal liquidity and every liquidity. For example, this is I think the ICT mentioned, and also AMD, because AMD accumulation, manipulation, distribution is now added to every SMC trader, and also the New York kill zones and all these kill zones. These are ICT kill zones. So, for example, now if you look at supply demand trader or the SMC trader, which they call this like smart money concept trader. If you look at them, what they do, and now they all just added these kill zones and timings, all these things, 9:30 opening and everything. They are all from ICT. I don't see now. You can say, okay, for example, if I'm just now trading with my concepts and I found something new, and then if I'm teaching a course to somebody else, I will just add a new concept inside of the ICT concept, and I will call it mine. This is my concept. Nobody has it. Simple. Everybody who has done it, or who also call it, we are, for example, different traders. We are smart money concept traders. They're just simply lying, because if you look at all these concepts, every concept is mentioned in details And every ICT video, if you watch them all the way back to 2011 or any video he has.
Yeah.
So I will not take any credit for any of new invention that I'm going to add into my topic. Everything is coming from ICT. There is one concept, I think, which was liquidity wide concept, which is from Chris Lurie. And I think also ICT cleared that in some videos. He said that, okay, some people will call it that when he was mentioning family gaps, some people in baby pips were like talking about the liquidity wide, and Chris Lurie called it. So he just said, okay, this is liquidity wide, simple. And he's not taking a credit for that. So that's the reality of being a good trader. But I believe that every other concept, let's say fair gap and properly where is in balance, all these concepts are taught by what? ICT, simple. And most important thing is that if you look at the AMD, I think AMD is the most important concept. For me, I'm using it like in every candle. If you look at every 4-hour candle, if you look at every daily candle, you're going to see AMD in it. And that's the teaching of ICT. And that's the most important thing in trading: correlation, manipulation, distribution. That's all. And then if you combine it with the ICT auto blocks, now where the auto blocks are coming from, ICT. Now still people have a lot of confusion about order. Where's the order block? They don't know the proper order block. They're just going to be like, okay, this confirmation entries or something like that. They will add those. They are like different style. Everybody's different style, but they still do not know what is the real order block. Now, if you look at the structure, ICT structure is completely different.
Yeah.
Because we have long-term lows, intermediate-term lows, and intermediate-term highs, all these things. But if you understand the simple structure of ICT, you're gonna know directly where price is going. With simple structure, you're gonna know all these things. And then the weekly profile, all these things. So smart money actually is. If you look at the smart money as a whole, it's really big. It's not like just like these are order blocks.
Exactly.
These are not just order blocks. Smart money is completely different, you know.
I think
the weekly profile, it's really important, all these things from ICT.
I think this set of people that's under the umbrella of smart money concept traders in quotes, they believe that they'll believe that their concept is probably way different from ICT. And in my own opinion, I feel is just like that, because just like you've mentioned 1,000, close to almost 1,000 things that ICT has taught, such as the AMD you mentioned, and most especially time and price, the Q zones. They people under the smart money concept umbrella don't really acknowledge to they don't acknowledge the Q zones, time and price understanding, and the understanding of institutional order flow. I remember talking to someone a couple months back on what is his understanding on institutional order flow, and he mentioned order blocks on higher time frame. So the order blocks that are respected on higher time frame, as it keeps going, that's what institutional order flow is about. And I understood where it was coming from, because that is the teaching that has been under the smart money concept umbrella, all right, of price just respecting order blocks. If he's respecting another block on the higher time frame, then we are bullish or then we are bearish. That's the understanding for smart money concept. And now I'm not trying to paint them black. I'm just saying that I'm just trying to distinguish each concept. So smart money concept is on its own, and the ICT concept is on its own. All right, so we have a whole different understanding here of the whole how the market works here, and ICT has a whole different understanding of how the market works here. Smart money concept believe that you have buying and selling pressure, and ICT believes that the market is being delivered in an algorithmic way, right? So that alone spells them out apart. All right. So
that's the big difference.
So you mentioned that your answers, you mentioned that ICT is simple to an extent. You said understanding of liquidity, and you even mentioned one of his teachings, which is the AMD. That if you can understand the AMD, that you see it on 1 hour to 4 hour, you understand AMD, you can even be a good ICT trader with that, right? So why is it then that there are still some people out there who probably will learn ICT after a while, then they don't pretty much understand it, and they come out and share that it's the same ICT concepts he probably uses demo, he probably is faking his trading accounts. IC doesn't work at all. But there are also traders who have used ICT, and I can name a couple right now that are actually very, very consistent and profitable using ICT. So what exactly is the problem? Why are this set of people not being able to absorb the teachings of ICT? And there are a number of people who are really consistent and profitable using ICT.
Yeah, okay. So it's really a good question. I think it's more related to the business side of the market. For example, if I'm running my business and if I'm teaching to somebody, I'm definitely going to be telling that, okay, I am some sort of like, I am the ownership. Look, if you are, for example, selling a product in the market, okay? So if, for example, if you're a company, you're selling a product, so what are you going to do? You are selling product, another person out there, he's a competitor, simple. So you want that, okay, there's somebody who's going to, for example, take my product, I'm going to be profitable. So it's more like a business for people now. Now, what they do is that, for example, if I'm going to run any shop or something, any company, so I have to sell my product, okay? And everybody has to do that. For example, if I'm going to teach some concepts, I'm going to tell people, okay, this is my own product, okay? So everybody is doing what? So there are a lot of people who learn from one person and then they're going to teach it a different way, okay? So there's like YouTuber, I think he was the YouTuber, his name is Mentafix, you know that, okay?
Yeah.
If you know that Mentafix, he said in his own videos, once I heard him saying that he was a student of ICT, okay? But right now, if you look at him, he's teaching it completely different way. He's a good smart money concept trader, okay? But he's teaching that in completely different way. But he never gave a credit openly to ICT. And he learned so much from ICT, he learned so much from ICT. But now if you look into his course, it's completely different.
But do you feel sorry?
So everybody is changing some sort of concept and then sound like, okay, this is his concept, okay? So for example, when you get one copy in the market, so what people are going to do, they're going to create more copies of it, a little bit change, okay? But the product where it's originally coming from is always going to be belong to that company who made it first. Now you can get, for example, let's say there's Apple, okay? And now if you know, okay, this is the product from the Apple company. But now if you look at the company from like copy of the Apple, they're going to be different. They're going to be like the look-wise, they're going to be same. There's going to be like strong processor, but the product where you want the product from the main company, from the Apple company, not the copy of the product.
Yeah.
So, but what a person gonna the person is going to tell you that, okay, this is, for example, this is mine or this is something. So everybody has to run their own business. Okay. So for example, if I'm going to learn from ICT and the next day, if I'm going to, let's say, if I'm going to be fair, I'm going to give credit to the one where I learned these concepts from. Okay. But there are some people who has to sell their own business. And for that purpose, what they has to do, they have to tell other people, okay, this is my own concept and I'm teaching that, and they're completely teaching the different way. But if there's a buying and selling pressure, okay, for example, if let's say prices are bullish on a daily, okay, so it should just go right away to the upside, okay? Let's say in your block, let's say there's a down close candle, price should come there and respect the down close candle and move up. Sometime you're going to see price is going to move up from just taking equal lows, and then it's going to move up. Sometime you're going to see prices taking equal highs and they're going to move down. So the liquidity pool concept, where it come from? It came from ICT. Simple, straight from ICT.
Yeah.
Before that, if you look at liquidity pool, people were unaware of liquidity pools. People were unaware of rejection blocks. And a lot of them would get what? They would get liquidated. Simple.
Yeah. So
if
do you
look
feel
at smart ICT?
Sorry, do you feel that this affects upcoming traders? Because when they start learning, I know a couple guys on Instagram, IG, who have started with learning ICT, and when they start learning ICT, they see it as something so complicating that they find his videos so boring, and they see that his teachings could be very, very frustrating to understand. But yeah, in smart money concepts, you can understand it perfectly. And you've been able to spell that out because of, so you mentioned earlier on that smart money concept is easy. Just markets, you always just go for the order blocks like you mentioned earlier on. But that is not the overall idea, but that's like a minor way of saying it. But is this the reason why ICT students will sometimes say that these teachings are probably frustrating to understand, it's hard to understand, it's hard to implement. That's why they move to something else. That's why they move to using trend lines. That's why they move to using chart patterns. Do you feel ICT his teachings are very hard to understand?
Yeah, I think ICT made it that way. It's really hard to understand. But you know, if you want to know the really, you know, the depth of the market, that's how he made it. That's how he actually made his course fully complicated. That's some really hard workers are going to pass through it. You know, he said the same thing, that I made it so hard that if you're not a really hard worker, you're not gonna learn it so easy. So that's why there are really less people with ICT concept that are really good with it. But some are going to there are a lot of people who I know personally. They're they have been finding the difficulties to understand the market completely with ICT concepts. But that's the same way that he created the entire algorithmic course. He framed it this way. He made it difficult. But if you, for example, if you are going to put a lot of work into it, then it's going to be easy for you. But if you're just going to simply take it like supply demand, then you're not going to understand it like,
Yeah.
you're not going to say the whole concept and how it works. So this is the most important thing. If you want to, for example, learn ICT, you have to take notes and you have to go through every of his video and then implement it in the market. And then also you have to trade live, not like demo accounts for at least 2 or 3 months and check it out. That okay, what's happening here? And for example, if you pick like one fairly good concept, or for example, one model of ICT, and you're gonna do what? You're gonna practice it live for the time being. Then you're gonna understand, okay, this concept actually works this way, because the chart timing is more important. It doesn't matter what concept you're going to trade. For example, if you know that okay, this is my area, and you identify your own area or your own model ones, then I think you can find success with any concept. I'm not saying that you cannot make money with smart money simple supply demand or smart money concept. If you understand the smart supply demand properly, I think you're going to be good with that. Okay, if you understand the simple algorithmic structure, that now there's like chalk concepts or something like that, then you can find success with that too. It's also same as ICT, simple. If you're just a SNR trader, then support and resistance trader is going to give you something. If you just understand, okay, this is my area and this thing always work, okay, because trading is a game of probability. If you know your area, if you know okay, this always work for me, and you have live market experience, then you're going to be a profitable trader in terms of probability if your psychology is good. So if there are a lot of ICT traders whose psychology is not good, is the concepts are too good, but the psychology is the problem. That's the most difficult thing, to master. Psychology is really important, and there's a lot of people who are lacking that.
Yeah. So from what you just talked about now, I think we've been able to spell it out pretty well that these two are entirely different things. SMC and ICT, they're entirely different things.
ICT, SMC is entirely different things, because we are not chalk trader. We don't look at chalk. We simply trade with the fair value gaps and liquidity. Simple. Okay, you know the general direction of the markets and rejection blocks. So where's the liquidity? There's some liquidity, and we know that okay, this is the time of like good time to trade towards the buy side or sell side. That's it. So we just look at the buy side and sell side of the range, and then we know that okay, where we're gonna get a rejection block, and after that, where it was old low and where's the old, where's the resting liquidity. Simple. So where's the rejection block, and you will always trade toward the one side of the market. Simple.
Yeah. So
all you need is just wait for your perfect area where it will always work for you. Yeah. The easiest thing about ICT is just to mark your range. Once you have your range, then you can trade it.
Once you have your range, then you can trade it. I think
Yeah.
a lot of new ICT traders will want to hear this. So we've been able to spell the idea apart. I think you mentioned something that I want to discuss is about psychology. And you mentioned that if you have a good psychology, you'll be able to understand ICT much more better. You'll be able to implement, not understand ICT, you'll be able to implement ICT much more better. And you also said that it's the same thing that comes in hand in supply and demand smart money concept. That if you are also a good trader, you can also utilize smart money concept and become consistent and profitable, whether you're using supply or you're using demand or you're using the understanding of buying and selling pressure. Same thing that you implement on ICT. I think that also makes sense because I know a couple of people who are not even using anything related with smart money concept or ICT. All they do is trend lines and they're consistent. Just trend lines and they're consistent.
That's important thing. Because they have, if you have screen time and you know that okay, what's happened after this trend line has been taken, for example, then if you know your thing, that's most important thing. But as in ICT concepts, what we have dealing range is simple. If I know my dealing range, then I know that okay, where I'm going to trade, where the price is going to trade towards. Simple. So we know that okay, this is accumulation, manipulation, distribution, and this is our dealing range. And now we have breakers, so price most likely there's more chances to go towards the upside or towards the downside. So this where we look. Simple. So the same way is for trendline trader. If a trendline trader has a lot of experience, let's say 2 years of market experience, and he went from being unprofitable trader towards a profitable trader with a trend line, then I think he should just skip that. Simple. There's no need to change the concepts all the time, because if one strategy works for you, then you do not have to change that. That's the most important thing. There's a lot of people who think that okay, there's just one way towards the market. No, the market, you can be successful with any strategy, but you must know your thing. This is the most important thing. If you know that okay, this is my area to buy and this is my area to sell, and this is the thing that always worked for me, then you can just identify your own area and you can buy it, sell it. The most important thing is that can you hold the trade? No, I cannot hold the trade. You can hold the trade. If you can hold the trade and you know that the price must go up, then you're profitable. Simple. But if you cannot hold the trade, it doesn't matter how many concepts you know. You will never be profitable. That's the most important thing.
Yeah. So the psychology is kind of like your psychology has to play hand in hand with your strategy, because you can have the best strategy in the world, the strategy made by someone that has 50 years of experience in the market, but if your psychology is still very, very bad and you are someone that overtrades and neglects a lot of rules, then you implementing that strategy will leave you very frustrated, and you may not aim for
really
profitability and consistency.
And then you're gonna do a revenge trading. Simple as that.
So what is then your advice on what is then your advice to new and upcoming traders to improve their psychology, not just in the aspect of learning ICT or smart money concept? What do you feel new traders can do to improve their psychology? Because I think that's like the main problem out there, because from what we have discussed, I think we've come to a ground whereby we understand that whatever strategy you're using in the market, you can always be profitable only if you have a good psychology. So what then can someone do to improve their psychology, since it's the main parts to breaking the barriers to profitability in the market?
Okay, so the most important thing about how to improve your psychology is to journal your trades, okay, and also, for example, note your trades. That okay, for example, I took this trade here, and when you take the immediate second trade right away, when you lose one trade, and then you have the losing trade because you just revenge traded that thing, okay, and you lose the trade. So you have to, for example, remove those mistakes from you. Okay, so you have to, let's say you have a range for ICT trader or any trader. Okay, for example, if you have one area to buy and you know that okay, you failed there, and now you want to do it again and again and again, and you're failing. Okay, but you're journaling. Okay, the journaling is basic. If you journal your trade, it basically tells you after when you are done with trading and you are in a loss right now, then you will realize your mistakes. That okay, why am I this mistake again? When I was kicked out once, why did I do a range trading again? Okay, so journaling is actually the most key things, a key thing that a person or any trader can do to avoid the next mistake in the future. So for example, you know that okay, this thing works for me like 50% of the time. If your strategy is above 50%, and you are, for example, making 1 to 2 risk to reward ratio, you're still profitable. But if you are, for example, taking a losing trade at one area and then you enter there again because now you don't know what's happening in the market. Okay, that's the most important thing. If you don't know what's happening in the market right now, you should avoid the market and go outside. Simple.
Yeah.
Because every day is the new opportunity. Simple. For example, if today I know that okay, I'm not going to get up my entry here, which I'm always looking for. For example, if this is always profitable for me, let's say some people are really good with buyings, and some people are really good with selling the market, the selling market. Some people are really good with the buying market. Personally, I am really good with buying market because I know that okay, this is a really good market for me, and it's always is fair to me. And I know that okay, the market is going to go towards the buy side, and I have certain condition for that. So I have to keep my rules and condition all the time, to and also follow those rules. You have to follow your rules. You have to make your rules. Okay, this is the high time frame order block. Let's say I'm going to buy here, and it work all the time. Then you do not have to move the stop loss toward the downside. Let's say you're buying an order block, and you know that okay, this is my buy area, and price should go towards the upside. If you, for example, it failed one time, and then you want to enter again there, then it's the big mistake that a lot of people will make, and they are going to probably blow their accounts. Because I've been through this, and when you cut these things off, then you become really good trader.
Yeah. So
yeah, so you have to make your rules. Rules are really important. First, define your rules. These are your rules. Okay. So
and one way, like you mentioned, to make your trading rules, for you to make your trading rules, you have to journal. For you to just so you can know the flaws and the benefits of your strategy, so that you can be able to set your rules and then implement them. I think I gathered that from that. It's very, very helpful for new traders out
because
there.
rules are some things which will cut off your emotions out of trading. If you have rules, it will remove your emotions. Okay? If you do not have rules, you're gonna be involved. You're gonna involve your emotions. But when you involve emotions in trading, then the trading will beat the market will beat you all the time.
Yeah. So we have
when you have rules.
So we have like 5 minutes left. I just want you to just one last question. This is for prop firm traders out there. I want you to give us just a little of your advice on what can they do for someone who is very, very consistent with his set of rules, following them on his own personal account, and decides to go into a prop firm account and is struggling to actually pass it. What advice would you give to that person? We have 5 minutes left. I just want you to just tell us this quickly.
Okay, so the paper trading is completely different from real account trading, because when you're paper trading, if you look at a lot of people really good with paper trading accounts, they will pass the paper trading account, but when they come to the live accounts, then they're just going to fail it. Simple. So what's going to happen is that when you are trading live funds, for example, if you are trading, let's suppose the paper trading, and you know that okay, you are really good, and you just write those rules, the same rules that you are paper trading with, and you pass the paper trading account. Now, when you come to the live funds and you keep those same rules and just keep your emotions out of the window, simple, just throw them out and follow those same rules that you were following, and now you pass the paper trading account. When you bring those rules towards the live funds, okay, you're just gonna do it the same way. But if you when you come to the live funds account, you just involve your emotion and cut out the rules. If you can pass the paper trading account with rules and regulations, and also journaling your, I made this amount of percentage and I can pass my account with these rules, then you can, if you move towards the live funds, what do you have to do? You have to follow the same rules. Do not remove the rules. That's the most important thing. Do not remove the rules. Follow the same strategy, and you're going to see you're going to pass your account. This is the most important thing.
Yeah.
So a lot of people will do what when they turn into the live funds, they just do what
You turn
they
off
just
their
look for
rules.
yeah, they just try to make the money. Okay, just pass the account real quick. Okay, put the trade here, I'm going to pass this account, and suddenly the market will just turn
Yeah.
upside down, and they will just blow their account. This is the most
Yeah.
important thing. Keep the rules, keep the same risk reward ratio, because trading is actually the probability. Again, if you are keeping your risk reward ratio and you're just following your rules, you're not going to blow your account. Just put your stop loss in the same place and let the trade do its work. Simple. 1 to 2 risk reward ratio, you're not going to lose your account. If you just keep your risk, manage your risk, then it's most probably that you're gonna pass your life funds account as well as your paper trading account the same way. But if you remove the rules, regulations, and all those things, and you involve your emotion again, you're gonna most probably end up really bad with that
Yeah.
too.
Yeah. Thank you very much.
Okay.
I'm pretty sure that there are a lot of people that will really learn from that one, because you mentioned a
Yeah.
lot about sticking to your rules and throwing the emotions out of the window, because that's very essential.
Yeah.
Because there are a lot of people that will pass the verification stage of a prop firm, but when they get to the live account, they are going to actually feel it. They are When you come into starts from funded accounts, prop firms, you have starts of people who have actually failed the live accounts after losing the live account after passing the verification. So I think what you said is exactly how people should actually act: throw their emotions out the window and still keep to the same set of rules. Well,
Yeah.
thank you for your time, and I really
Okay.
appreciate
You're welcome.
making